Welcome to today's session and thanks for joining. In these videos, I show how you can swing trade profitably in any market condition, up, down, or sideways, by taking only truly high probability and low risk trades that have maximum forces from the market, sector, industry, fundamental, technical, and even seasonality in their favor. I will revisit some trade ideas or market analysis that I shared recently and review how that played out. If you stay with me, I will show some stocks getting ready to buy or short and some that you may trade on Monday. You could also trade them on Friday near the close. If you could find them in real time using Q systems, you could do that. How do you know the uptrend has flipped to a downtrend and profit from it? By the way, the bear does not look so scary, isn't it? And it does not have to look scary if we know the current market trend and trade along with that. Knowing if the market is in an uptrend or downtrend is essential to making consistent profits in swing trading stocks. If you are correct on the market trend, 50% of your work is complete. How often are you correct on the market? One way to know that is to review your past week's market analysis and see how that worked out. I will review some of my previous market level analysis later today. You don't have to be accurate on the market direction 100% of the time. Indeed, it would be almost impossible to do that. That is why you manage risk, size positions, and use stop loss. The first thing to clarify about the market trend is the time interval. The trend changes based on your choice of interval. For swing trading, the daily interval is the one most people use. I do the same. That is the primary interval. How do you know the market trend using the daily interval, the current market trend? Q provides several ways of knowing that. Here are some. If major market level ETFs, indexes or futures have higher high, higher low, the market is trending up. If they have lower high, lower low, the market is in a downtrend. That is an external view of the market. We can assess that using the Q daily entry chart. You may also use the same daily entry chart for the market breadth total view custom index. That will be an internal health view of the market and its trend. We will look at this later today using live systems. Secondly, the market is in an uptrend if a market level instrument moves between the upper boundary and mid boundary level in the Q daily entry chart. If it stays between the lower boundary and mid boundary, it is in a downtrend. We look at this later today using live systems. Thirdly, the fast, standard and medium direction lines in the Q entry daily chart are responsive enough to the market's trend change that they are useful for swing trading. Q also has two other direction lines. Those are slow and very slow. They are useful for other purposes, but they are, as the names suggest, slow for deciding swing trade direction. How do we use the direction lines for deciding trend? The market is in an uptrend if a market level instrument stays above the responsive direction lines in the daily entry chart. If the instrument stays below the responsive direction lines, the fast, medium, standard lines, it is in a downtrend. We will look at this later today using live systems. Fourthly, the market is in an uptrend if a market level instrument has memory trendline supports and no memory resistance in the Q daily entry chart. If an instrument has resistance trend lines and no trend line support, it is in a downtrend. The Q trend lines may be drawn from few days back to many years back. Therefore, it is important to note one thing, that the trend lines that are far away from current price or are coming from far back period, maybe from few months back to few years back, they do provide valuable support resistance, but they may not be useful in deciding immediate trends for swing trading purposes. And in a way, this is similar to what I mentioned about the direction lines, trend lines that are coming from far away in price or coming from far back in time. They are not so useful in deciding current trend, just like the slow and very slow direction lines are also not so useful for deciding immediate trend for swing trading. We'll look at this later today using live systems. Also, the Q memory trend lines are useful in knowing when a trend is stalling and then reversing. An uptrend will have memory support lines and no nearby memory resistance. When the uptrend is stalling, it will tend to be inside a triangle pattern. In a downtrend, there will be memory resistance lines and no nearby memory support. The transition from one trend to another becomes obvious when you look at how the memory lines are being deleted and new ones are forming. We will look at this later today using live systems. Those analyses are from a technical standpoint. Using Q, you could also anticipate the trend reversal points using non-technical analysis like sector industry stock breadth in Q edge, like technical breadth in Q finder, and percentage of stocks above 50-day moving average in Q breadth, also 3-month new high low in Q breadth. These are market level analysis but not technical analysis of an instrument. You may use them to anticipate a trend reversal. How to do this anticipation? You may refer to my recent videos for more details on that. Once you identify the current trend, how do you profit from that in swing trading stocks? In a trending market, you may stick with trend following trade setups. Q has multiple such setups like flow, pullback, etc. In an uptrend, only take long trades. In a downtrend, only take short trades. Is it so? That is probably true if you are using other systems, not necessarily Q. You could do that using Q also, but Q traders have more trading weapons in their arsenal. Q has multiple reliable reversal trade setups too. They tend to be quite lucrative trades from a reward risk perspective. And sometimes the trend reversal buys may lead to an uptrend. When that happens, you get to have an early entry in the stock than trend following only traders. That also adds to your profit. You may book partial profit early and then try to let profit run if the stock continues its up move. So you catch the stock as a buy reversal trade, and then if it changes to an uptrend, you continue to hold at least partial position, thereby letting profit run, maximize your profit. If it is trending down, are we downtrending now? We'll find out. But if it is trending down, the market, should you wait for a trend following setup? That is a profitable strategy. There is no question about that. Trend is your friend, my friend. That is true always. Q flow setup is a great use of that, taking trend following longs in an uptrend, taking trend following shorts in a downtrend. However, you could also look for reversal trades, preferably in the market's trend. So the market may be in a downtrend and you take a reversal trade. That means the stock was in an uptrend while the market was already in a downtrend, which will also mean picking the top of some stocks when the market is already downtrending. But these stocks are being shorted at the very top, which tend to be lucrative shorts. You could use the headwind or box short setups for that. So these are reversal trades for the stocks, but they are also being taken in the overall market's trend, which is downtrend in this assumption. Under some situations, you could also look for reversal buy trades when the market is still downtrending. So in the last slide, I explained the benefit being lucrative trades of shorting the top of stocks in a downtrending market. But under some situations, you could also take reversal buy trades when the market is still downtrending. Because remember, the stronger fundamental stocks tend to move up before the market does. So it is possible under some situations. Those situations rely on over exhaustion. That is one way. Some of those situations, over exhaustion, jump thrust low and price extreme low, and then sudden extreme bullish momentum, big move up 3 in a fundamentally strong stocks. So market was downtrending, the stock was also moving down, and then suddenly it springs upward. It's a fundamentally strong stock that may give us a reversal buy setup in a market that is still downtrending. Note though those can be traded, I prefer to stick with the market direction except when the market internals are also showing over exhaustion. So market is downtrending, but market is showing over exhaustion, too much stretch to the downside, and then I see a stock springing upward from stocks over exhaustion to the downside. That may be a better buying situation. How to know when the market internals are over exhausted? You can assess that using Q analysis of sector industry stock breadth in Q edge, technical breadth in Q finder, percentage of stocks above 50-day moving average in Q breadth, and 3-month new high low in Q breadth, etc. If the market analysis, and this is an important point, practical, valuable, useful, aka profitable point, if the market level analysis does not tell clearly if to buy or short, carrying out a complete top-down and bottom-up analysis investigation to find 360-degree trace may show where the low-risk trades are, and that is where we may go if the market level analysis does not tell clearly what to do. We may do this today, carry out some bottom-up top-down investigation if the market level view is not clear. What is the current market trend? Is it so exhausted that a reversal may come soon? Most importantly, are the lower risk trades in the up or down direction? We'll look at all those aspects in today's live session. Greetings, I am Sagar Nandi, retired IT professional, swing trading stocks in the USA and India markets using only one trading system and technique, that is the Q systems that I developed. You may contact me using my email IDs info@superiorprofit.co and tradingprofitably@gmail.com. I regularly share live market and stock analysis on these publicly accessible forums. My website superiorprofit.co, X handle Superior Profit, and YouTube channel Trading Profitably are most welcome to make use of them. Q systems run on Metastock and TradeStation platforms. They have multiple components. I'll use many of them in today's live session. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. I just now came back from a road trip. This is a picture here from the road trip. It's taken by the side of the Mekong River. This side where I was standing is in Thailand, and the opposite side where the hills are, that is in Laos. Beautiful place. I had a nice road trip along the river, the Mekong River. How did Q analysis play out? Remember, I mentioned to know the success of your analysis, you may look back and see how the analysis played out. That is true for market trend analysis as well as individual stock analysis. Let's look at some analysis that I shared earlier. This is a market level internal health check chart, market breadth of Nasdaq and NYSE. This is what I shared in the last market recap. And you may see what I pointed out in the last recap. For Nasdaq, I showed that the oscillator 3-month new high low was at extremely oversold level from where a move up was likely. Works like a clockwork. I started using 3-month new high low in these ways, not only on these charts but on several other charts, all breadth analysis. After watching Dr. Jeffrey's videos, thanks to him, they work like a clockwork and they make money for me because I can more accurately decide the market's possible next move. And this is what I shared in the last market recap. What did Nasdaq breadth do this week? Let's look at that. Here is the slide of next week. Sorry, this week. Last week, the 3-month new high low was at extreme oversold condition. A move up was likely, and that happens all the time like a clockwork and happened once again. In fact, after I shared last week's market recap, even NYSE became extremely oversold in terms of 3-month new high low. It became oversold on Monday this week, and from there it also went up. Works like a clockwork, all the time worked once again. The analysis that I shared last week, looking at the Nasdaq composite market breadth, worked beautifully, aka profitably. Also in the last market recap, I shared the major indexes, internal health check, the breadth charts, and I pointed to Russell 2000 specifically, showing that that was also at the oversold condition for 3-month new high low, so much so that move up was likely. This is what I shared in the last market recap. How did it end this week? Here is the chart. Russell 2000 recovered. Works like a clockwork all the time. Work once again. Now let's look at some analysis I shared earlier in terms of sector, industry, stock breadth. This is a snapshot I took from my YouTube video made 2 weeks ago. Not this week, not previous week, prior to that, 2 weeks ago, and I shared this sector, industry, stock breadth from QEdge and commented that it was bullish, but so bullish that it was looking overbought, and I was expecting a down move from there. This is what happened, what I did, what I shared 2 weeks ago. What did I show last week? This is the snapshot. The Q analysis again worked. My anticipation came true. Last week, the sector, industry, stock breadth turned very bearish. From overbought condition, it turned bearish. Very effective, useful, aka profitable analysis using QEdge. How is the picture today? This is sector, industry, stock breadth of current week, and this is showing flip-flop across the periods. 1 month period green, 10-day red, 5-day red, 2-day turned green, 1-day turned red again, flip-flopping between bullish to bearish picture. We'll come back to this later today probably using the QEdge live system. But another Q analysis I specifically mentioned in last several market recaps as flip-flopping. And that analysis is very useful because that is technical breadth analysis on the longer term weekly interval. I commented about that flip-flop, and now in today's session I am going to show a series of snapshots from previous market recaps, all of weekly technical breadth, but from different weeks market recaps. I captured all of them from YouTube videos. This is 6th July picture 5 weeks ago. Bearish, you can see it here. So 5 weeks ago bearish, 4 weeks ago turned bullish, 3 weeks ago turned bearish again, 2 weeks ago turned bullish, 1 week ago turned bearish. This is what I shared in the last market recap, and this is this week's picture turned bullish. For many weeks, all the weeks that I looked back just now, the weekly technical breadth is flip-flopping. If that flip-flop continues next week, we expect a bearish picture. This itself, the technical breadth weekly at least, itself is not giving enough confidence to buy, though the weekly is actually bullish. But we just saw it is flip-flopping from 1 week to another week. Therefore, the weekly itself is not giving enough confidence to buy, though it is bullish. Because we not only look at today's snapshot, we look at how it is moving from 1 week to another week. By the way, heavy raining started here just now. Sometimes during the storm, the electricity goes off. If that happens, I may have to stop the webinar. I hope that does not happen. Let's continue. So technical breadth weekly is showing clear flip-flop, that is indecisive. Let's look at the live systems now. Let's first look at the technical breadth. The weekly picture we just saw, it is bullish but flip-flopping, and if I look at the daily picture, that is actually bullish. Now as we go through the analysis, you may find out that is counterintuitive. From looking at the media, looking at other analysis, you may have a preferred direction of trading, but after this analysis the preferred direction for trading, swing trading, may change, because here the finder daily weekly together is telling there are reasons to look for buying. Though the weekly is flip-flopping, it is still bullish and daily is bullish for technical breadth. On the other hand, if I go back to sector industry stock breadth on the live Q edge system, yes, it is indecisive in the sense it is changing from green to red to red to green to red. Friday is bearish, but at the stock level it's almost neutral. Because of this flip-flop, it doesn't tell clearly whether next week it is going to more likely to go down or up. If it goes up, there is a case for buying. If it goes down, there is a case for shorting. The 5-week, the weekly period, very important longer term interval for swing trading, is of course bearish. Is it oversold? That answer comes from bucket analysis. No, it is not oversold. Only about 4% of stocks are below lower Bollinger Band. It has to be 30 to 40% for the market to be oversold. Is it bearish? Yes. 66% of stocks are below mid Bollinger Band. So it is bearish but not oversold yet. That gives us some confidence to short, continue to short, whereas technical breadth is showing some reason that we may look to buy. We have not looked at the market trend using technical charts yet. That is this week's theme. Why don't we start with that? I will look at now a series of instruments and use the methodology I described earlier through slides to assess if they are in an uptrend or downtrend. Let's start with dollar index. Tends to have an impact on the market. If dollar index goes down, it tends to help the market, but not always, because last week, and I showed it in the last market recap also, dollar index came down, but market also came down. But let's come to that important question on dollar index, the theme of this week's webinar. Is it in an uptrend or downtrend? This instrument is having lower high, lower low in a downtrend. It is staying below the responsive direction lines, downtrending. It is staying below, sorry, not below, it is staying between the mid boundary line and lower boundary line. That is also in a downtrend. It has trend line resistance and no nearby support. Remember, I mentioned if a support trend line is coming from very far away, they are very useful as support, but they are not so useful for deciding immediate trend. So we may ignore this line for immediate trend decision. That means we have only trend line resistance, no trend line support for that. So we have to say from that point of view also, it is in a downtrend. Dollar index is in a downtrend, and if the downtrend again resumes next week, it recovered a little bit. If it starts to go down next week from Monday, or may even go up little bit, hit the trend line resistance, at which point it will hit the yellow and white direction lines, resistance. If it comes down from there, that may also help the market to go up. So dollar index is telling, as far as this is concerned, it's not a time to short, not a time to buy the market, but it is downtrending, but we don't have a low risk short setup. That's why I said it's not allowing us to buy, not allowing us to short as far as dollar index is concerned. Is it exhausted? No, it is not exhausted. There is no jump thrust low. Downtrending but not exhausted to the downside, can go down more before a reversal is more likely. What about mega cap index? Mega caps tend to have a huge impact on all pockets of the market, and very big impact, very huge impact on certain pockets like QQQ of the market. So let's look at the mega cap custom index, and I already captured the daily chart in a slide. Is it in an uptrend or downtrend? Let's follow the methodology again. Having lower high, lower low, downtrend, staying below the responsive direction lines, downtrend, staying between mid boundary line and lower boundary line, downtrend, has trend line resistance, no trend line support that is coming from near time. There are trend line supports, they are valuable also, but they are coming from very far away, not useful for immediate trend decision. So from all the methodologies, mega cap is in a downtrend. On Friday, it did not give any down candle or bearish shape, bearish color candle is not allowing us to short. If it goes to the trend line resistances, reverses from there with a this kind of magenta color candle, that will give a low risk shorting opportunity, that will be a trend following flow shorting opportunity. We may look for that. If it comes down right now, it may come too close to the trend line supports, that will not allow us to short using low risk methodology. But if it goes up little bit and then reverses, then we'll have a low risk shorting opportunity. There is no buying opportunity immediately. Even if it breaks to the upside, we may not buy then, because the stop loss will be very far away. We'll have to wait for a reversal and for price to go up again, pull back and go up again, thereby giving us a low risk buy point. We don't know which one will happen. In terms of jump thrust, though it is downtrending, it is not at jump thrust low yet. So it may go down little bit before it starts to go up. That was mega cap. Another very useful custom index is of the leaders index. And remember, as I am going through these instruments, note whether they are uptrending or downtrending. Earlier, until previous week, all weekend market recaps prior to that, I was showing the market level instruments, including these, they were in an uptrend. Last week, I was thinking the support might hold, but it did not in some instruments. And now as I go through these market level instruments one after another, we'll see whether they are uptrending, downtrending. You will find out mostly they are now in a downtrend from all the different angles. So this was mega cap index in a downtrend. Let's look at the leaders index. If the leaders break the strongest stocks of all the sectors, then the market's up rally may be over, at least for the time being. That is this index, leaders index. What is the trend? Lower high, lower low, staying below the responsive direction lines, staying between mid boundary and lower boundary line, has trend line resistance, no nearby trend line support. From all the angles, it is in a downtrend. From jump thrust, it is not exhausted yet. Right now it does not allow me to short. If it goes up little bit, hits the trend line resistances and tilts down, that will give a lucrative low risk shorting opportunity. Doesn't allow me to buy yet. What about the market breadth total view? The very broad view of markets internals using a custom index. What is its trend? And I captured that for you. This is the market breadth total view. We apply the same methodology again. Is it in a downtrend or uptrend? It has lower high, lower low. Prices staying below the responsive direction lines, staying between mid boundary line, lower boundary line, and has trend line resistance, no trend line support nearby. This one is coming from very far away, effective support, but for immediate trend decision that is not useful. So from all the four angles, the very broad internal custom index total view is also in a downtrend. Is it exhausted to the downside? No. Again, on Friday it does not allow me to short, but it has a trend line resistance. If it goes up little bit, reverses from the trend line resistance, that will give me a low risk lucrative short point. And that is the observation I made so far in all these three important market level instruments: market based total view, leaders index, as well as mega cap custom index. Let's look at the market breadth total view using live systems, because that will give some clue as to where we may look to buy, look to trade, buy or short. And some of these are thanks to Mr. Ian Woodward, may him rest in peace. Beautiful analysis that I incorporated in Q systems. And what I wanted to show is that few things. One, the Hindenburgs were very useful. Even when the market was going up in this period, that was going up, and now we can clearly understand, probably better understand, that it was going up mostly because of mega cap and larger cap stocks. Many other stocks, small caps, mid caps, fell a lot when the Hindenburgs kept on showing the Hindenburg confirmation signals. The market also, not the market indexes, but many stocks dropped when the Hindenburgs and also this irrational exuberance, Bango signals kept on coming, thanks to Mr. Ian Woodward who developed these systems. Now at the bottom, there comes a signal that is opposite to irrational exuberance. Irrational exuberance is called Bango, and at the bottom comes bingo, or throwing the baby out with bathwater, throwing everything of value, selling all stocks without reason, without enough reason, I may say, even the fundamentally strong stocks. The bingo itself is not a buy signal, but it shows if it comes near the low, it shows that everybody who wanted to sell may be selling, and soon after that a buy point may come, and that buy point is shown by accumulation count and also Eureka signal. The color of the candle turned bullish. Thanks. Eureka was also developed by Mr. Ian Woodward, may he rest in peace. And major accumulation point that came on Thursday. We saw just now that this market breadth total view custom index as a whole, it is in a downtrend. But remember, the Eureka, which is equivalent to Ken Slim's follow through ray, may often come when the market is still in a downtrend. And if you kept an eye on the Eureka and the accumulation count after bingo, you might start to look at buying from Thursday itself. If you bought on Thursday some of the stocks that gave rise to this Eureka and accumulation count, they might have gone up enough by Friday to book partial profit. It was possible. But that is again looking at internal details. As far as the trend of the total view custom index, that is still in a downtrend. And as I mentioned, trend is always our friend. When the market is in a downtrend, we may take some long sometimes, but be very cautious, take fewer positions, and of course we always cut loss if it goes against us. What I will like to see after noticing the bingo followed by Eureka accumulation count, what I would like now to see is for the total view custom index come to an uptrend. So this candle chart, let me go back to the slide. I would like this to be in an uptrend. How that can happen? It may break the trend line resistance, that will take time. Instead, if it goes down little bit, creates a higher low and starts to go up. Then using the higher low without waiting for a higher high, I may start to buy stocks because now I saw the Eureka and accumulation count came after the bingo exertion. That is an additional insight, very useful insight I see and I shared from the market breadth total view. Now let us look at the trend of the market ETFs. You could look at futures or indexes also. I look at the ETFs in this session and decide individually the market ETFs are in an uptrend or downtrend using the same methodology again. I switch to Q Elite now on TradeStation. I tend to switch back and forth between TradeStation and Metastock to demonstrate both platforms. Same systems, Q, but on different platforms. This is QQQ, Nasdaq ETF. Let's decide the trend on the daily interval first. Lower high, lower low, below the responsive direction lines, staying between, certainly between the mid boundary line, lower boundary line, has trend line resistance, no trend line support, that is coming from nearby time. So from all the four angles, QQQ is in a downtrend. The bearish headwind worked beautifully. Jump thrust high, price extreme high, big move down 3 worked beautifully. Weekly backdrop is bearish. Daily now inside a triangle, right in the middle of the triangle, doesn't allow me to buy, doesn't allow me to short. It is nearing jump thrust low exertion point. Very fast it came from jump thrust high to jump thrust low, near jump thrust high to near jump thrust low. And I see it is near jump thrust low and we had big move up 3, but the downtrend is not allowing me to buy so easily. So what could happen? For trading purposes, I could wait for it to go up, hit the trend line resistance and go down. Because the weekly is remaining bearish in color, if it goes down from trend line resistance, it may give a flow trend following short setup, that will be a low risk short point. On the other hand, if it goes to the trend line support and goes up from there, that will create a higher low. And because it is near jump thrust low, big move up 3 has already come, I may not wait for a higher high, and I'm keeping the Eureka and accumulation count from market with total view in my mind when I'm saying that I may start buying if it creates a higher low at the trend line support and goes up from there. That is how I'm combining the analytics from different market angles into my possible trading points. And both of these, whether I take short at the resistance level or buy at the trend line support, those are all low risk entry points, and that is a constant in all my trading. Currently, if we stick to our this week's theme, what direction or trend is there in QQQ, that direction trend is downtrending. SPY, same exercise again, lower high, lower low, staying below the responsive direction lines, staying between mid boundary line and lower boundary line, has trend line resistance, no trend line support. From all the four angles, SPY is in a downtrend. Is it a jump thrust low? No, not at all. More downtrend is likely possible, but not on Friday. Backdrop color in weekly is bearish. Therefore, if it tilts down now, there is no nearby support. Tilts down and gives a bearish flow candle, that will be a low risk shorting point. If it goes up, reverses from the trend line resistance, that will also likely give a low risk flow trend following short setup. There is not so much likelihood of taking longs here. I would rather look for longs in QQQ than in SPY based on the analysis I just shared. Dia, and here the market is looking little bit different. First, let's go through the trend analysis. Yes, it also has lower high, lower low. In the last few days of the week, the last week, it is staying below the responsive direction line, staying between mid boundary and lower boundary line, has trend line resistance, no trend line support. So for last week or so, Dia is also in a downtrend. Prior to that, it was actually not in a downtrend. This week, Dia has also turned into a downtrending instrument. But does it allow me to short right now? No, of course there is no short setup, and also there is a trend line support in weekly. For shorting, what I would like it to do is to go up all the way to the trend line resistance and reverse from there. That will give a bounce short setup, or I see the weekly backdrop has turned bearish. If it goes down from here or goes up little bit and goes down again, creating a lower high again, giving a flow bearish candle, that will give a trend following short setup. So I may look for either of them. Reversal from the trend line resistance or creating a lower high and tilting down from there. They will give short setups that will be low risk. There will not be any easy buy setup right now. If you look at the weekly, this support is showing that Dia is stronger than QQQ SPY, and Dia also backdrop color turned bearish only for 2 weeks. For SPY QQQ, it was for many more weeks. And lastly, IWM. Here also the backdrop color is bearish only for 2 weeks. Here also we have weekly support holding, but let's go through the trend decision again. And here we see no clear lower high, lower low. There is no lower high yet. You can say there is a lower low but no lower high. So this is not in a downtrend from that important perspective. Yes, it is below the responsive direction lines. Currently, that is in the current week, only this week. It is below the responsive direction lines. It is between mid and lower boundary line. but it has no lower high, lower low, and it has no trend line resistance. So it is not in a clear downtrend, and that may be surprising in a way if we did not carry out this detailed analysis, and that may also be hopeful for only stock buyers, those who don't like to short. It is not allowing me to buy now, but if it goes down little bit, creates a higher low and starts to go up, I can look back and see a congestion area here, support area, at which point the bullish headwind came earlier. So if it creates a higher low and goes up, I'll be happy to start buying. And again, I'm keeping the Eureka and accumulation count in mind from market breadth total view when I said that. Right now, it is not very clear in terms of direction. So QQQ SPY very clear downtrending, DIA downtrending, but it happened only this week. IWM trend is not clear from multiple angles. No lower high, lower low, no trend line resistance. So small caps and industrials are doing much better, which may also mean, and it certainly means, that mega caps are doing worse. We saw that already from mega cap custom index being in a downtrend from all the four angles, and the earlier leaders are also in a clear downtrend. So from that perspective, the stocks that were at a very high price level, they are continuing to show weakness, not so much for other stocks. And in fact, if you remember last week's market recap, when I shared the weekly technical breadth with bearish headwinds, I did mention that though I bought a few stocks last week, the bearish headwind in the weekly interval predicted more pain ahead for stocks at a higher price level. And that is now in sync with what we are seeing when we look at all these market instruments and analyze their trend. I would like to now investigate the two broad composites because I see QQQSPY more weak than DIA IWM. What about the broad market? And that picture we may see from New York Composite and Nasdaq Composite, and I will tie it back to what I discussed in the last market recap. Let's do that on Q Global. First look at, I change from dollar index to Nasdaq Composite first. Nasdaq Composite. This is looking similar to QQQ. Backdrop is bearish for 4 weeks in a row. As far as trend is concerned, let's apply the methodology again. Lower high, lower low, staying below the responsive direction line, staying between mid boundary and lower boundary line. No trend line resistance, but it is having lower high, lower low, and no nearby trend line support. So it is also in a downtrend, not at jump thrust low yet. Now it has a trend line support. Remember, this support is coming from very far away, so it is not useful so much in deciding immediate swing trading trend, which is downtrending, but it does provide equally valuable support. So if price comes down right from here, I am not able to short, and therefore for trading purposes, what I am starting to think, it is at jump low, not thrust low, but jump low. We have a trend line support. If price comes to that, goes up, creating a higher low, I may not wait for a higher high, I may start to buy. There is no trend line resistance, it will be creating higher low, has trend line support, and again I am keeping the Eureka and accumulation count from market breadth in mind when I say that. So though QQQSPY are looking very bearish, not allowing us to buy right now, Nasdaq Composite is saying that it is okay to look out, not yet, but look out for a higher low and then may start buying. And in the last market recap, I always like to tie back with previous market analysis because that shows the effectiveness of the analysis, meaning whether it is profitable or not. Let's look at New York Composite and New York Stock Exchange Composite. Last market recap, I showed and I mentioned this, it was surprisingly strong. That strength is continuing. Is it downtrending in daily? No. Has no lower high, lower low. Has no trend line resistance. No support also nearby. Is it clearly moving below the responsive direction lines? No, it had a wild swing that does not make it downtrending. What we see that it is moving inside a box. In daily, right in the middle of the box, doesn't allow us to buy, doesn't allow us to short, and weekly has a beautiful support from trend line. These memory trend lines work beautifully. Last week I mentioned this was the strongest looking market level chart. That strength is continuing. And this is a very broad index. That is also telling me that it is not yet time to buy probably, but start to look to buy. What I would like it to do is to come down little bit, create a higher low, maybe just come to the weekly trend line support, little bit down, maybe even pierce below that and immediately go up. That will create a higher low in daily. I may not wait for a higher high. I may start buying because I am also keeping the Eureka and accumulation count that followed bingo. Surprising strength in broad indexes, which also shows the stronger leaders, mega caps or not, are much weaker than the broader market. Now gives more hope for those who only want to buy. And I like to buy stocks too. Overall, if we look at the market internals, if we look at the market ETFs and then the composites, it's not giving very clear picture. If we look at the sector indices stock breadth, it's not giving a clear picture. If we look at the technical breadth, it is bullish than bearish, but it is flip-flopping from week to next week, not giving a clear picture. When that happens, as I mentioned, it is useful to carry out an actual top-down or bottom-up analysis to see where the low-risk entries are. But before that, I'd like to show one thing. I mentioned observing how the trend lines get broken and new ones get created provides a quite clear picture often about how the trend is changing. And let's start with this IWM. I look at the market ETFs. This is the historical daily chart template that shows the trend lines that are broken in the past. IWM daily. Currently there is no trend line resistance, no trend line support. From that angle, trend is not clear. And earlier you see it, not here, stayed inside a triangle, stayed inside a triangle, stayed inside a triangle. So for this long period, if we switch to the entry chart now, we would see also that it was moving sideways, not going anywhere, while the overall market in terms of SPY were rallying, and now we know that was because of mega caps. So we knew that earlier also from Q analysis. When did it come out of exhaustion? Here. That was the time you could, when it came out of congestion was at this point, congestion, that was the time to buy. But looking at the sideways move, if you followed my market recaps, I bought earlier, and as it rallied, I closed the longs. Now we don't have clear trend here. The broken trend lines also show that. And if I now change to dia, also quite strong at present. See support trend line, resistance inside a triangle, inside a triangle, inside a triangle. It broke out here. And this candle, which had a bullish flow, was the perfect low risk point to buy, because by that time it came out of all the triangle patterns, had no trend line resistance, had a bullish flow candle. That was the perfectly timed long trade setup using flow trend following long setup. If you observe the trend lines like that, you will know when the low risk entry points are coming in either direction. And now it has downtrend, no downtrend line, no support trend line. There is no easy way to buy now, not right now. If I look at SPY, it will look different from IWM and dia. And now we have trend line resistance, no support, but let's look back. When it broke out of this trend line resistance, there was no trend line resistance nearby. This was a gap up day. That was the perfect time to buy. After that, we never had trend line resistances. It started to rally. Perfect timing. If we didn't buy there, it moved up. We could buy again when we had next shallow pullback and a flow candle. After that, again it rallied, didn't have any pullback at all. So it gave us two low risk entry points when the trend line resistance. After that, this trend line resistance was broken. Now we have trend line resistance. So if we follow this point as the first point to buy after trend line resistance is created, next buy point will be far away. That is why I am hoping that it will create a higher low and go up from there. Maybe not in SPY, but in IWM and dia. And if I look at QQQ, again looking back, what was the lowest risk entry point? Trend line resistance was here, support inside a triangle, came down, new trend line resistance formed inside a triangle, broke out with a gap up. That was the lowest risk optimal buy point. After that it rallied, didn't pull back. So we didn't have any buy point. We need a pullback for a low risk buy point or a breakout, preferably as was in this case with a gap up for a lower risk entry, because the stop could be below the gap candles low, somewhat below that. So we could either buy at this point, perfect timing using the trend line breakout, or we could wait for a pullback and then a bullish flow candle. That would be the next lower risk entry point buy side. After that it rallied, pullback somewhat only here, again gave us a flow candle. That would be the next buy point. The earlier we can buy is of course better. We could try to book partial profit along the way and hold the remaining position for longer period. At the right edge, it is inside a triangle. It has trend line resistance, support both. I could not short here, I could not buy here on Friday. If it reverses from trend line resistance, I'll be happy to look to short. If it reverses from trend line support, I'll be happy to look to buy. That is what I'm going to wait for now. That is also how, watching this trend line resistance supports form and getting broken, you know the optimal buy point. And when the optimal buy point, the best buy point actually happens, you will find a lot of growth stocks also breaking out, and you could find them easily using Q Vital. You could further check the strongest industries using Q Edge and find some 360 degrees buy setups at those optimal points. Now last week I did buy. Let's look back on that also. I did buy few stocks mentioned. I bought ACI, I bought this ACI, I bought CNMD, and I bought an exploratory position anticipating a trade. There was no proper trade setup on IGT. I did not buy Kenview. And I think on Monday or Tuesday, I mentioned on Twitter, you may follow that post on Twitter, that because the market level did not hold. For example, if I look back on SPY, I shared that chart on Twitter. On Monday, this candle formed in SPY. I was expecting, when I did the last market recap, we were here, I was expecting that this support would hold, but that was my Friday's analysis, and there were supports in other market level instruments nearby, but that support did not hold on Monday. So on Monday, I closed the three positions, some with small profits, some with small loss. So this is an example of where I took out closed the trades before it hit my stop, before it hit my target, because I pay more emphasis on the market direction. The market direction changed, support did not hold that I expected to hold, but I took the trades before that and support broke and I closed them. Now, still I would like to look at those stocks using the stop signal, protection signal, and show one thing. That thing is the value of the 360 degrees trades. This is ACI. This is last Friday. The stop would be here using Q protection signal. Though the stock came down little bit, stop was actually not hit. Yes, it of course didn't hit my target. So this is a stock I closed with a small loss, but it did not hit my stop. IGT, I bought it on anticipation, in anticipation. There was no setup on Friday. Even then, the Q protection level did not breach back to my buy price, but anyway, I closed this trade with a very small loss. CNMD, this was last Monday. Sorry, not Monday. This was last Friday when I analyzed the trade. Stop would be at this level below recent low. Stop was not even approached. Had some inside bars, or all the bars were inside the signal days bar. CNMD also did not drop much. And Kenview, the last stock that I shared in the last market recap, this was the day I shared the stock, Friday. Protection level on a closing basis could be here, or safer would be here below recent swing low. Stop was not hit. It in fact rallied. Why I came to this is that though the market showed considerable weakness, especially in the beginning of the last week, early days of the last week, Monday, Tuesday, the 360-degree trades that I identified did quite all right. And in fact, if you look at Finder performance table using weekly interval, if someone held the stocks, because stop was not hit, if they held all the four stocks overall, they would make a reasonable profit. You could average out these four percentages, because Kenview went up a lot. On average, he or she would have a nice profit in the four stocks, and anyway, stop was not hit. But I also wanted to explain that it is perfectly valid, certainly for me, to close the trades before it hit target, before it hit stop loss, if my market view changes. And that is what happened on Monday. My market view changed on SPY. I tweeted about that and I closed my trades. Now, what to do today? Market level is not giving very clear idea, I would like to spend some more time carrying out the, let's do the bottom up analysis. Easy to do that. Let's look on the short side. There are, interestingly, there are, that technical breadth is more bullish than bearish. On the short side, there are 50 possible short setups. I don't want to look at all of them. Let's carry out a fundamental scorecard calculation for them. Notice while it is sending the data to Q Vital that several of these stocks that have a possible bearish setup, they are actually already, sorry, not there, already at price extreme low. In fact, many of them are at price extreme low. Those will not be easy shorting opportunities. Also notice some of these stocks dropped hugely on Friday between 47% to 8%. Those stocks would also not give easy shorting opportunities because the stop loss would be far away. Is my system hanging? Give it a few seconds. Sometimes during the webinars, my systems tend to be less responsive than it is during my actual own trading, maybe because many streaming programs are also running and it is not a super fast internet connection that I have in my village in Thailand. What I wanted to show, and I did walk through that exercise before in preparation for this webinar, is that if I looked at these 50 possible shorting candidates technically, then look at their fundamentals, look for at least one star bearish candidate, either overvalued or negative earnings growth, and then further look for weak industry or decelerating industry. In fact, there was not a single low risk shorting opportunity. And yes, the system is not responding, so let me not go through it. On the other hand, if I did the opposite exercise, that is looked for buy candidates, remember Q Finder, weekly, daily, both are bullish, though weekly is flip-flopping, we saw that. It is possible or thinkable, you may say, to look to buy because of Eureka, because of accumulation count coming at a low price point, and because technical breadth is bullish. I did also carry out the other bottom-up analysis. Look at stocks with possible buy technical setup, look at one-star buy candidates in terms of fundamentals, that is undervalued or high earnings growth. Further look for strong or accelerating industry, and I did find a few stocks. Yes, my Excel is hanging. That's no problem. Close. I'll not show the vital scorecard for fundamentals or industry scorecard using QH, but I'd like to show these two possible buy candidates I found. One was BEN, Ben, strong fundamental stock. You may check that out using Vital. Strong industry, you may check that out in QH. Beautiful support in weekly with multiple bullish headwinds at that price level, and daily just had a breakout. Only thing here is that where to put the stop. There is no easy way to place the stop because the recent swing low is quite a distance below current price. So I like this stock chart, I like the fundamentals and industry also. So I may try to buy it using intraday precision entry chart, the pivot chart that we have. I may look to buy using that. So let me save that. I didn't buy it. I did not buy any stock last week. After I closed the 3 that I bought last week, I closed them on Monday. After that, didn't buy any stock. And the other possible buy candidate I found, that is DRVN, and that is even better. Remember, trend is our friend. This is clearly uptrending. If we apply the same methodology again, it has higher low, higher high, staying above the responsive direction lines, staying between mid boundary and upper boundary level, has trend line support, no trend line resistance. From all the 4 angles, it is in an uptrend, and it is giving me a flow trend following long setup. We don't see any weakness at all in the stock in recent days and weeks. It's having a beautiful higher high, higher low pattern, giving a low risk buy opportunity. So DRVN is an easier buy for me than BEN. BEN, I will have to use precision entry chart to buy, but DRVN, if I found it on Friday before the market close, if I carried out the analysis in real time, I could find it, I could buy it. You could buy it on Friday itself. It's also having great fundamentals and great industry score as well. So these 2 stocks I'm going to keep in my panel. If you carry out the 360-degree analysis using Q like that, this week probably you will find easier buying opportunities rather than shorting opportunities, and that is a way of Q telling which direction to take for trading, for swing trading. If you are still with me, you are amazing people, amazing traders. Thank you for that. Thanks a lot for attending. I look forward to seeing you in my next session. Have a great weekend, and as I always say, as these live examples, I'm quite confident shows there is no reason not to do that. Trade profitably. Thank you.